Hello dear Forex traders, welcome to IFC Markets. You are watching weekly market overview on IFC Markets YouTube channel. Let's start. The last week, the largest winner of the major currencies against the US dollar was the Swiss franc by gaining 0.80%, followed by British pound advancing by 0.6%, and lastly, the euro climbing by 0.40%. On the negative side of performance, the greenback was mostly steady the previous week and dropped slightly by 0.2% against its major peers. The biggest losers of the previous week were the loonie, the Japanese yen and the Aussie, depreciating by 0.80%, 1.10% and 2.30% respectively. The US dollar index did not move much, trading mainly in 81.25 to 80.55 the previous week, despite that there were many speeches by FOMC members, as well as comments by coming member. Most of them were dovish. Nonetheless, the US dollar declined the most against the Swiss franc, weighted by Fed meeting minutes that accommodative policy would remain for a long period, although asset tapering could start the coming months should the employment and growth continue improving. The USD Swiss franc dipped from 0.9165 to support at 50%. Fibonacci level of 0.8891 to 0.9235 at 0.9059, and as virtue of that, we expect the corrective move to be limited there or lower by next support at 61.8% at 0.9025. Moreover, markets were driven by major central banks' comments and developments. The release of the Fed meeting minutes the last Wednesday revealed that despite the 9-1 votes to maintain monthly asset purchases, members were concerned about when to start asset tapering. Equities were under pressure, 10-year Treasury yield was advancing, and risk appetite was squeezed. US dollar was strong on speculation that the following month's asset tapering would begin, forcing the USD JPY to continue its upside development, rising from 99.61 to fresh 6-month high above 101.51. In addition, the Bank of Japan sounded ready to add to its quantitative easing program should the inflation target of 2% will be at risk, further adding pressure on the Japanese yen. Technically, based on the symmetrical triangle pattern, the positive structure to expect it to lift prices to price target at 108.95. In our view, long-term trend remains to the upside, but overbought technical indicators create concerns of a possible correction this week. The biggest loser of the previous week, the Australian dollar, was heavily under pressure due to Reserve Bank of Australia. At its meeting minutes on last Tuesday, left rate cut possibilities open, and Governor Glenn Stevens reiterated that its exchange rate remains uncomfortably high. Moreover, the out USD was weighted by sliding prices of crude oil and gold, despite that global equities were rising, with the Dow Jones making new highs. Technically, the kangaroo currency pair is on a falling configuration, so our expectation is that would maintain bearish bias. However, oscillators are oversold, suggesting being cautious. Looking ahead, the coming week would not bring extensive news release, while on Thursday is US Thanksgiving holiday, reducing volumes in the FX market. Nonetheless, not so important news could trigger speculation of Fed asset tapering and ease concerns over the possibility of ECB rate cut, and that could significantly impact currencies. On Monday isn't much to follow apart from US pending home sales. Next, on Tuesday, main focus is on US consumer confidence, as well as monitoring US building permits. Then on Wednesday, we are alerted by UK gross domestic product figures and on US durable goods orders, as well as on early release of US jobless claims. On Thursday, Bank of England Governor Mark Carney will speak at Conference for Financial Stability and will be monitored for comments on monetary policy. In general, Thursday is expected to be characterized of thin trading amid US bank holiday. Finally, on Friday, Japanese inflation release would take early attention, and later market participants will be watching Eurozone unemployment figures, followed by Canadian gross domestic product report. You are watching Weekly Market Overview by IFC Markets. Do not forget to subscribe to our YouTube channel and follow us every Tuesday. Goodbye.